Last week was a choppy one, in stocks and bonds and in the headlines. After one of the strongest earnings-driven rallies on record, AI jitters, higher rates, and geopolitics knocked the mega-cap tech names lower. But even with some of the largest stocks flat or even down on the year, the broader market has returned 8% year-to-date, a solid result for a full year, and we're not even at the halfway mark. Last week's inflation data ran hot, as expected. Higher energy prices pushed CPI inflation to an uncomfortable 4.2%. Core inflation, stripping out food and energy, is still running closer to 3%. Still well above the Fed's 2% target, but cooler than when the Fed was cutting rates in 2024 and 2025. This week, all eyes will be on the Federal Reserve and its new chairman, Kevin Warsh. The Fed is widely expected to hold rates steady at its meeting on Wednesday, though the chorus of analysts, commentators, and even policymakers calling for rate hikes has grown louder lately. The recent inflation pickup looks mostly driven by the oil shock and surging computer equipment costs, and a higher Fed policy rate can't fix either of those. But with inflation now above target for 5 straight years, investors are looking to see if Kevin Warsh will be starting his term as chairman attacking inflation head-on, or if he'll stay the course, even if that means tolerating higher inflation for a little longer. Wednesday's statement, projections, and press conference, if Warsh continues with these, should give us our first real clues. Also on Wednesday, just before the Fed's announcement, we'll see the latest retail sales data for May. On the surface, household spending appears to have held up this year. Consumers keep spending at a decent clip, at least in nominal terms. But adjust for inflation and add in what executives have been saying on earnings calls about customers pulling back or trading down, and the picture gets more complicated than the headline figures might suggest. Lastly, on Wednesday, we'll see the pending home sales figures for May. With elevated rates and prices still high, investors and analysts will be watching to see if housing activity is holding up or if it's starting to crack. So things to watch this week: the Fed and its new chairman and their meeting on Wednesday, retail sales data, and pending home sales.
The views expressed are solely those of the authors and do not necessarily reflect the views of First Citizens Bank and Trust Company or any of its affiliates. This material is for informational purposes only and is not intended to be an offer, recommendation, or solicitation to purchase or sell a specific investment strategy, any security, or insurance product, and should not be construed as legal, tax, or accounting advice. Please consult with your legal or tax advisor regarding the particular facts and circumstances of your situation prior to making any financial decision. While we believe that the information presented is from reliable sources, we do not represent, warrant, or guarantee that it is accurate or complete. Many companies referenced in this content are independent third parties and are not affiliated with First Citizens Bank and Trust Company. All third-party trademarks referenced, including logos, trade names, service marks, and icons, remain the property of their respective owners. Your investments in securities and insurance products and services are not insured by the FDIC or any other federal government agency and may lose value. They are not deposits or other obligations of or guaranteed by any bank or bank affiliate and are subject to investment risks, including possible loss of the principal amounts invested. Past performance is no guarantee of future results. Estimates of future performance are based on assumptions that may not be realized. This material is not a solicitation of any offer to buy or sell any security or other financial instrument or to participate in any trading strategy. Diversification does not guarantee a profit or protect against loss in a declining financial market. First Citizens Wealth is a marketing brand of First Citizens Bankshares Incorporated, a bank holding company. The following affiliates of First Citizens Bankshares Incorporated are the entities through which First Citizens Wealth products are offered. Brokerage products and services are offered through First Citizens Investor Services Incorporated, FCIS, a registered broker-dealer, member FINRA, and SIPC. Advisory services are offered through First Citizens Investor Services Incorporated, First Citizens Asset Management Incorporated, and SVB Wealth LLC, all SEC registered investment advisors. Certain brokerage and advisory products and services may not be available from all investment professionals in all jurisdictions or to all investors. Insurance products and insurance are offered through First Citizens Investor Services Incorporated, a licensed insurance agency. Banking, lending, trust products and services, and certain insurance products and services are offered by First Citizens Bank and Trust Company, member FDIC, and an equal housing lender and First Citizens Delaware Trust Company. For more information about First Citizens Bankshares Incorporated, its subsidiaries, and its investment professionals, visit www.firstcitizens.com/wealth/disclosures.